Hey everyone, it is Evan here from the Trade Risk on Friday, August 2nd, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we're going to jump into the technicals dashboard here and take a look at what went on. This was the largest down week of 2019 that we saw. Major indices across the board were down about 3% on the week. You can see the 5-day change numbers here, all varying from about 2.6% in the Dow all the way up to 4% lower in the NASDAQ 100. You can also see some of that Dow attempted outperformance here on today's numbers, down minus 0.37%, while we had the Qs down almost a 1.5%. All of the major indices have lost the 10-period simple moving average. We are still above the 50 and 200 SMA across the board, but we definitely have some short-term damage there as the pullback really got underway this week. When we scroll down here and take a look at sector performance, on the upside, it's defensive tone, it's utilities, although biotech, IBB here is not traditionally up here for defensive, so interesting to see IBB up there, but also followed by healthcare more broadly. And on the downside, it's really semiconductors that took the heat this week, minus 6.61% to the downside. They were the outperformers recently over a couple weeks, breaking back up to new all-time highs, so getting a quick and steep pullback there, followed by discretionary and technology. As far as major markets go, it was VIX all day here, 48% pop for the VIX this week, followed by the defensive asset classes here, safety haven assets, if you will, the long bond and gold. And on the downside, we had China, we had emerging markets, and we had the S&P 500. So let's jump into the charts. Take a look at some levels here. This is the S&P 500. This is the weekly time frame. It's where we like to always start our analysis. Each bar represents 1 week worth of trading, and this is the cash market. And what we can see here with this week's trading session, down minus 2.96%, we broke below the prior 4 weeks lows. So you can see here that we've kind of meandered just slightly, kind of grinding higher over the past 4 weeks here at new all-time highs. And you can see we cleared all of those and closed below them this week, which is a short-term bearish signal for the market. And we also lost this 29.55 level. This is the area where we've been wanting to pay attention to, has really just been drawing as our line in the sand, that we want to see this market hold above to continue acting as strong and as healthy and as bullish as possible. So last week, or in our last video update, we were trading up here around 3,000 in the S&P 500. Trends were up. We were holding up. Support was there in place, and we were giving the benefit of the doubt to the bulls. That changed at the course of this week, at the way we closed, really post-Fed on Wednesday. Some of that knee-jerk selling started on Wednesday. We got follow-through Thursday, and we got some more follow-through on Friday. So those were the 3 days where it was time to sort of take notice as we started breaking below this cluster of prior week's lows, and then this 29.55, which was the prior highs here back from June, April, or May of this year. So, depending on your time frame, this means different things. So, this could mean that it's a time to be selective, a little more selective now, at least on the long side. Maybe you're raising cash, you're getting defensive, you're building watch lists, or maybe you're looking for shorts now and thinking that this is a market regime change and volatility is, going to be on the rise going forward for the month of August, which is historically not generally a great month for the stock market in terms of seasonality as well. So this week, I think really, you have to ask yourself what your time frame, what your strategy is, but this is certainly a week to take notice here. That's generally the way I like to label it, because this is where we've got a change of character in the market. We saw a large pop in the VIX. We saw a large expansion in range in the market. We saw volumes increase, and it all went in the opposite direction from which we've been trending. So let's pay attention now. Let's be more selective active here, especially on the short to midterm. As long as we are below 29.55, I do want to at least have that disposition. Otherwise, I really like to see us back above, 29.70 or so, seeing ranges compress, the VIX start to come back down. These are all going to be signs that, things are perhaps getting better, or we're starting to find support in this market, which at this point in time, we don't have any evidence of as of right now. So 29.55, that's the level I'd pay attention to on the upside. On the downside, if this pullback continues, if this does get uglier, 28.72, this is a level that's been drawn from many weeks ago. This has been sort of a battleground spot for the market. It's where we were, kind of topped out back earlier in the year. It's had some significance. It was the prior all-time highs back at the start of 2018. It's where we finished this rally here in this nice large expansion up here back on the first week of June. So 28.72 and then all the way back to 2800. Those are the levels on the more intermediate term that I would start to pay attention to on the S&P 500 if we are to pull back. And really, it's a good exercise just to see what that looks like, because if we were to draw from the all-time highs we just made and we look at where we are now, this has been approximately a 3% pullback, which by all standards is pretty mild and contained. If we get down to 28.72, you're looking at about a 5% pullback in the market. And if we get down to 2800, you're looking at about a 7.5% pullback. And if we get down to the June lows, we're looking at about 10%. So those are some general guidelines just to know kind of where we are, where we stand, where pullbacks that have potential to get to could sort of get us in terms of percentage basis in the market. But otherwise, we'll take this one day at a time. Let's take notice of this day. Let's take a look at the VIX here, as we talked about a couple of times already. But you can see this is trading all the way back up to just under 18. It did fade off of the highs, get as high as 20 here intraday. And you can see it's just got this nice pop up here. Coming back to sort of the May highs here is where we topped out just in this lower 20 area back in May of this year. So it'll be interesting to see again if we see a total regime shift here and the VIX to stay bid up around this 20 area, or if this is going to get aggressively faded, something to pay attention to. But again, just more signs that something changed a bit here this week, and it all really kicked off that catalyst of the Fed. Now, if we go to some other major markets here, go to the Russell 2000, switch over to this board here, you can see this was starting to show some signs of life in here. This started to be the index that was actually acting best and starting to outperform a little bit, and that really just kind of all negated itself on the second half of this week. Wednesday, it again tried to break out here in the morning before the Fed announced, and then after the announcement, you can see it just pulled back a little bit into Tuesday's range. Thursday was the big follow-through day to the downside, and then Friday more follow-through to the downside. So negated a lot of this constructive action in here. We did put on a long trade here on Tuesday on this engulfing reversal day, looking for that rotation, looking for a breakout here in the Russell 2000, and that was pretty short-lived as we were stopped out just a couple of days later, taking a loss on that trade. No longer have that IWM position that we put on this day here. We exited it and we booked that loss, and we will just stay sidelined for now going forward. If we look at the bigger structure here, you can see we're just comfortably back into this multi-month range that we've really been in since February now, between about 150 and 160 is where most of the supply has traded. If we look at the NASDAQ 100, we have violated this technical level that we were paying attention to, this 191 spot here. This was the prior highs back in May. It's where we sold off to back in just 2 weeks ago in July. And now you can see we're breaking below it. And notice the volume on all of these indices are all on heavier volume. So we get breakdowns, we get volatility expansion on heavy volume to the opposite direction, to the downside. Those again are all the clues here to take notice that something has changed here in the market. Again, could be short-lived, or it could be just the start to something bigger. We don't know at this time, but we do know that we have evidence to at least, again, lighten up defensive action, be selective. It all depends, again, on your time frame and expectation strategy. So that is it. That is really what's gone on here in the broad picture, and hopefully everybody navigated this okay. It was a pretty quick change of character here, so we'll see how long it's left to stay. We still have earnings season that we're still going to be grappling with. We had a lot of earnings report this week, so we also had that, but there's more still in the coming weeks or so, so let's not forget about those catalysts either. Now, if we go to some of the other major markets, we have TLT here, which really just acted as the classic safety haven on Wednesday. It began rallying here, finished up almost 1%. Thursday, the aggressive 2% push to new year-to-date highs, and then Friday, even more follow through, heavy volume coming in here. And after going sideways for about 2 months, we're getting a continuation to the upside here. And if we zoom out even further, we're getting awfully close or really kind of targeting now our sights on those all-time lows for rates or the all-time highs in bonds, that is, for TLT. So it'll be interesting to see how much this continues. But this weekly chart here, look at the volume that came in this week. Look at this trend that has emerged this year. Continues to work here in the bulls' favor, and bond prices still getting bids on all time frames. If we look at gold here, we'll just go to the next safety haven. Not quite as aggressively breaking out, but still a very powerful looking day here on Thursday, as this had this bullish engulfing bar, heavy volume to the upside. There was no follow through on Friday, so a little more reluctance here in GLD, but still, again, weekly time frame acting quite strong here. It's been nothing but straight up for the past basically 7-8 weeks in a row. Good volume coming in. Bulls remain firmly in control for GLD as well. Now, if we look at silver here did get a little bit of a bid here, kind of stopped the bleeding on Thursday, but it was still finished lower on the week. It was down 0.78%. Remember, silver had this big expansion bar on the week of the 19th of July. It was up almost 6.5% this week. It is now kind of cooling off, going sideways here. So I'm watching this. I'm looking for this pullback here to potentially maybe reallocate into some silver. Right now, no position, but watching this consolidation, watching the volume come through, and just waiting for this to maybe cool off a bit and see if a trade sets up there for silver. Now, last up, if we go to energy here, we got oil, which really got hit hard here on Thursday. It was down 6%. It did rebound into the end of the week, put in this inside week here on Friday, up 1.5%. Heavy volume coming in again, as we've sort of been saying here. This picture is a little bit messy, just sideways, choppy, not so clean in my eyes. So for USO, really, again, still kind of avoiding this right now and letting this volatility just kind of ping pong back and forth. Natural gas, though, is got my interest here. It's back to these lows. It put in a nice little reversal week day today on Friday. It did get in a pretty explosive and quick move on Wednesday. It was up a quick 5 or 6% intraday. It gapped open higher on Thursday, but that sold off. Then we had follow through selling on Friday here today. But again, that bit of a reversal. Gonna be watching this, gonna be looking at this, doing some analysis this weekend for a potential trade entry here. Like the divergence that's been at play here. I like the increase in volume. It's still an aggressive trade because all trends are still to the downside, but it looks like there's at least some attempt here of some two-way trading and potentially a bottom getting put in. Again, very aggressive and counter trend. So that is it. That is what all the major markets are up to. Let's take a look at sectors now. We'll sort based on top performing, bottom performing sectors. The best performing sector this week, area of the market, was real estate. Real estate was positive this week. The IYR was up over 1%. Technically speaking, doesn't really change anything. It hasn't been in a very convincing uptrend here. It's just been grinding to the upside in kind of an upward slanting channel. There's a series of lower highs and higher lows in place, so it's a bit of compression. We're waiting to see perhaps a breakout of either above 91 or back below 87 area. Right now it looks like we're moving to the upside, but best performing this week, though still doesn't look all that, still needs some time at least to get a more convincing pattern, at least in my eyes there, for the IYR. Second up was XLU. This is utilities. This makes sense. This was up slightly here on the week. Again, kind of a sideways consolidation pattern for the past 2 months or so, but again, when markets falling 3%, utilities, eking out just a slight gain is quite the outperformance, and it's what you generally expect when you see volatility in the market. The IBB, though, is the unusual one, and this could be due to some of the earnings that were out this week, some of the influential companies, but IBB standing out here as something that just lost minus 0.24% on the week. Notice it did not take out the last week's lows. It is still holding up here, and it is sort of interesting if it can hold this 104 area, if it doesn't break down, or maybe even if it just does a quick look below and then gets a fast rejection back up. I think that actually would be interesting for maybe a potential tactical trade. Keep an eye on this to see if IBB continues to outperform here, if it's just kind of a 1 week, earnings related thing, or if this is actually going to try and hold up and, perhaps be a leading sector in the future rally for the market, something to keep an eye on and start thinking about. On the downside, it was semiconductors, as we talked about at the top of the video. You can see this had a very strong run up through June. This was up, pretty much in a pretty close straight line, 26%. It is now pulled back approximately 8% after 26% up. 8% down, not unreasonable there. I mean, the moves are happening fast. The magnitude is large, but when you think of it in terms of ratios, that actually isn't all that crazy here. But volume picked up. An abrupt sell-off, an abrupt pullback is never what you really want to see. It's always ideally to see it more in a cool, calm, collected way. So semiconductors going to need to see a higher low and more evidence of buyers wanting to step in there before, sounding the all clear signal. Discretionary here also losing a key level, this 120, 121 area. This was the prior highs from May, came kind of slamming back down below it. So this to me is in the penalty box until we can recoup and really start to put in a higher low and reclaim that 121. And then last but not least is XLK. This has also lost the May highs here. This had a great run over the course of June as well. High volume kind of pullback here. So really it's going to be, a spot where you'd want to see buyers step in, or, of course, on the other side, always kind of look at this with a glass half full mentality on the long side. But these are the sectors where you could start to look, if you do believe volatility is here, where you'd want to be paying attention to the short side of the market. If you're looking for semiconductors to maybe collect themselves, put in some type of bounce here, maybe a dead cat bounce, catch that short back for a potential rollover. These are all ideas here in the underperforming sectors of the market, XLK, XLY semiconductors, so on and so forth. So that's what I got. That's what went on this week. It was a very busy week with catalysts, with Fed and earnings, and the market definitely, kind of tipped its hand and showed us what it's thinking about all of those events. So let's see how next week goes. And remember, it is August. It is that summertime classic volatility, more sort of, pessimistic month in terms of seasonality. So let's keep all that in mind and adjust our plan strategy accordingly. So have a great weekend. Thanks as always for tuning in and watching. You can subscribe on our YouTube channel, follow us on the Trade Risk. Have a great weekend, and we'll see you in the next video update.